Environmental, social, and governance investing, or what's known as ESG, is making a powerful impact in the markets and how investors engage with public companies. Today we're celebrating the launch of Legg Mason active ESG ETFs with ClearBridge Investments. The new ETFs are called the ClearBridge Large Cap ESG ETF, ticker symbol LRGE, and the ClearBridge Dividend ESG ETF, YLDE, appropriately as the ticker. Joining me at the Nasdaq market site is Mary J. McQuillan. She's a portfolio manager and head of ESG investment at ClearBridge, and Stephen Rigo. He's the senior financial services sector analyst at ClearBridge, to discuss the role of ESG investing and trends. MJ and Steve, thank you very much for joining me. Tell us more about ESG and its impact to the industry.
Sure. So ESG investing is new, relatively new right now, but it's actually been around for quite some time. For ClearBridge, this year, 2017, we're celebrating our 30th year of ESG investing at the firm. And the way we've always thought about it is that it's a long-term investment approach. It's meant to find or identify companies based on our rigorous fundamental research, companies that are going to last for a long time, sustainably, and through multi-generations. So these are companies that we're excited to own, that we have high conviction, and the whole approach is to say this is a very attractive investment, but we also want to make sure we understand what are the E, environmental, social for S, and governance factors that could impact either the risk profile of these stocks or the return opportunities where these companies are getting competitive advantage that others aren't.
Well, Steve, how is this important to the investment process and stock selection?
Sure. Anytime you can identify a company that is not only doing the right thing by their customers and also doing the right thing by their shareholders, we find that that's an opportunity for an investment that can compound and be sustainable for long periods of time.
Do you think overall, with ESG being so important to the investment process, that companies have tightened up corporate governance over the years?
Yeah. Oh, sorry. Yes, that's absolutely. I mean, when I think about, I've been working in ESG investing for 21 years, so I think about 2 decades ago, the awareness on the governance aspects in terms of transparency and what investors expect to see from management has risen quite a bit. So with social media and other outlets, it's very difficult for management to not do what they say they're going to do, and there's a lot of transparency more now than there ever was before.
Why do you think investors choose stocks or funds that follow the ESG process?
I mean, from my standpoint, when you're offering a compelling product, whether you're a low-cost provider or you're doing something that's benefiting the environment, that's inherently going to draw people's attention and make awareness to your brand. And when that happens, then you can generate brand loyalty and hopefully a sustainable growth rate.
Okay, MJ, let's dive into the new ETFs. We'll start off with LRGE. What is it designed to do?
Well, LRG is actually, we're excited about it because it's one of our longest track records. It's got a 15-year track record of successful performance as a strategy. It's seeking to invest in large cap companies with capital appreciation, but also with very high potential growth in terms of earnings. And the senior management team, myself, Margaret, and Peter, who work on the portfolios, we have an average tenure at the firm of over 20 years. And for the goal of many of these companies is not only to invest in excellent investments, but also to use our approach with our fundamental team to advocate for what is best practice in terms of a long-term view.
Right. And for YLDE, the dividend income producing ETF, what's the goal with that one?
Well, what's interesting with Dividend Strategy ETF, ESG ETF, is that one of the senior portfolio managers is actually our co-CIO. So in terms of tenure, again, another team that has over 20 years of average experience at the firm, very familiar with dividends. But what's interesting about this product is that for investors who are seeking high income, this is a very nice solution. It's large cap blue chip companies, great capital allocation policies, good cash flow yield. But in particular, with these companies, they have a rising dividend. So it's not just a dividend in the portfolio with the company, but it's a rising dividend. So we're excited about that one as well.
Okay, and Steve, does ClearBridge build ESG into all of its funds?
Absolutely. I mean, it's part of my process anytime I'm going to evaluate a company. It's not just about the numbers and the fundamentals, it's about the type of products they offer, the type of governance they have, their impact, their footprint in the environment. These are all conversations that happen anytime we meet with management. So it's not just about your sales, it's about how you're generating those sales and the type of products that you're selling.
So with ESG, it's relevant to all sectors across every vertical. So what are some examples? Let's talk about a stock that might be in one of the funds. And I'm very happy to learn that Nasdaq is in one of the funds because of our ESG rating. So let's talk about what the ESG rating is and how come Nasdaq rates so well.
Sure. So Nasdaq offers a set of products that I think really help with the transparency in the marketplace. So there's some compliance and surveillance products that are gaining some traction in the marketplace that are helping the buy and sell side monitor trading for potentially nefarious activity, insider trading. And products like that not only are beneficial to the Nasdaq from generating revenue, but anytime you bring increased integrity into the marketplace, it's something that we find is valuable from an ESG perspective.
And plus what we're doing from an ESG perspective with NASDAQ, that could also resonate and translate to other companies as well as they improve their governance.
The exchanges are in an interesting position because you can set some sort of disclosure guidelines with the companies that are listing with you. So this has become a very large movement where the sustainable stock exchanges are around the world, where many of the major exchanges in the US and outside have been working to increase transparency and disclosure with their own companies. So that's an unusual position where you have an oversight and some discussions with the companies that you're listed with to say this is something we would support. And it's not new. The number of exchanges around the world that have been increasing disclosure of their listed, asking for disclosure for their listed companies has gone up. So that has like a multiplier effect. It's not just NASDAQ now. NASDAQ is influencing many of the companies that it lists.
The education and the seminars that they provide for the companies that list on the exchange in order to better understand how ESG investing, what we're looking for, what we're interested in is, I think, something that sets NASDAQ apart in terms of the amount of effort and time that they invest in the listed companies and making sure that they're aware of those issues.
And is there a sector where there's a higher concentration of ESG stocks? For example, does tech have the most number, or financials?
Well, what's interesting for us is that there's a lot of new ETF, a lot of new ESG products that are on the market, including passive ETFs. But this is an active, one of the first active ESG ETFs, which allows us to actively engage with the companies. For our strategies, we tend to have high concentration and very large share ownership for the long term. So this enables the analysts who conduct much of the engagements with managements to really get a sense of what those companies are doing in terms of long-term strategy. So this is where the analysts have an ability to rate for A, which is a beginner company, a double A, or a triple A. And through those engagements, many of the companies that started out as an A eventually migrate to be double A and then ultimately to be triple A. So if you look at sector by sector, you will, on a relative basis within its industry, you will see companies that, sectors like high tech, for example, you mentioned, they tend to have a lot of triple and double A's. It's a technology sector, high innovation, very attuned to what's coming down the pike and very fast moving. You have other sectors that might be materials and industrials that you may have a healthier mix of A's, double A's, and triple A's. So by sector, we found that the analysis makes much more sense to understand what are the key issues for a food company like food safety versus IT hardware like waste disposal versus financial services and strong governance. And each of those areas get examined. I'll just mention for these portfolios, again, with high ownership, long-term holdings, but we also have a lot of companies that we're engaging for positive change. So sometimes clients will take a look at some of our top holdings and say, oh, I wouldn't have expected to see that company in there. But because our analyst is doing so much work behind the scenes and engaging at the CEO level, they get a lot more access to understanding what is in the minds of the companies and also to communicate what sort of changes they think will help, all from shareholder value, all from a shareholder return perspective.
It's really interesting because ESG is almost a form of activism. In a way.
In a way, well, we're advocating for positive change because almost in a self-interest, we want these companies to be in our portfolios for a long time. We want them to succeed. So by having that high engagement level, again, at the CEO and others in management, it helps us to very much communicate, always be open and transparent. And we ask our companies to be transparent and to disclose. So one of the areas that we ask them to talk about is how much disclosure they're doing about their activities, because once you disclose, it gives you a higher urgency to be more to be accountable and to set targets. And so those are things that we think are good. So like large cap growth, ESG has companies like Google, for example, and Microsoft, and those are two IT software and media tech companies where we think they're doing great work on women and gender diversity. There are a lot of discussions about gender pay gap, about promotion and training, and these two companies have set out the targets and disclosed, again, how they think about hiring and promoting women and paying them, as opposed to the human factor. So they might use artificial intelligence based on the role and the title, as opposed to a group of men who are deciding how to put a raise through for a female employee type of situation. But Microsoft for data security is huge, so they're thinking always about data security, always about customer privacy. They're pushing in terms of what the legislative barriers might be to make sure that they can do what's best for their customers and for the overall society overall. And for Google, they're one of the biggest investors in green energy. So if you think of all the servers that they have to power all those searches and all their algorithms, that's a heck of a lot of power that they need to generate. And so they've actually created their own servers. They've manufactured their own servers, which are much more energy efficient. And they're the biggest buyers of green energy to help support for a long-term sustainable source of energy. So going beyond the traditional fuels that you think of for power, like natural gas and others, they're much more focused on solar and wind.
All right, well, thank you very much for joining us today. Certainly hope ESG investing is a trend that continues to grow because you're doing a lot of great work out there. Thank you, MJ.
Thank you so much.
Thank you, Steve, and thank you, Twitter, as always. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.